Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia. Our webinar title today is Shifting Through the Noise, Quality Growth and Income. Welcome, everybody. My name is Shen Chu. I'm the moderator for this session. So in this webinar, we are going to explore the market outlook for the second half of 2024, whereby the speaker will share with you the market outlook for the US market, China market, the ASEAN market, as well as the Malaysian market. Now, allow me to briefly introduce our speaker today. He has more than 19 years of experience in fund management and equity research. He joined Principal Asset Management Berhad in 2017 to manage unit trust funds and institutional mandates covering Malaysian and ASEAN markets. Before that, he was attached to Libra Invest, managing and supervising unit trust and research divisions that covered ASEAN and China, Hong Kong markets. He commenced his career in fund management industry at Public Mutual Berhad. He had research responsibilities for regional plantation and consumer sectors, as well as research country coverage for ASEAN markets. Subsequently, he moved on to the portfolio management, specializing in ASEAN markets. So he started covering ASEAN markets in 2010. He was also previously with PricewaterhouseCoopers as an auditor. He holds a Bachelor of Commerce in Accounting and Finance from Monash University and Clayton campus. He's also a Chartered Financial Analyst charter holder. So he's none other than Mr. Lee Chun Hong, who is the Chief Investment Officer of Equities from Principal Asset Management Berhad. So welcome to this session, Chun Hong. Pleasure to have you here today.
Thanks, Shen. Thanks, everyone and the audience. Thanks for spending your night listen to me. Hopefully, I can bring some fruitful information to you and help you to understand better how we look at the market. Shall we move on?
All right.
Okay, next page. Next slide. Okay, so these are our macro assumptions. So our title is Shifting Through the Noises, okay, and find out what are the implications and what do we, how do we invest based on the things that we see. Okay, so these are just a snapshot how we see in 2024. So we just break it up by US, Europe, China, and then the smaller market like eventually Malaysia. So as US is the largest economy, I mean, we can't ignore them, okay? And late last year, they continue to surprise us to the upside. And year to date, 2024, continue to remain the same. So we think US would not enter recession, soft landing maybe, okay? And the debate about recession is still ongoing. As for Europe, I think they have had a technical recession. That's why they are one of the first one to cut interest rate. I think they are in the dire strait to continue cut interest rate because of the weak economy. In China, as you know, China has been in the doldrum for a long time, especially during the COVID year when the government implements some of the drastic, draconian measure to clamp down the COVID spread. And that has affected the business and the consumer confidence. Okay. So, but lately there are signs that economy has stabilized, especially after the Chinese New Year. As for inflation, I think this time has been a bit sticky for US, and of course, some of the data points are showing some bounce in the inflation data as well. But our base case still remain the same. Inflation will continue to fall and closer to Fed target maybe by year end or early next year. As for Europe, inflation expected moderate closer to target range. Whereas for China, they don't have any inflation problem because of the big domestic demand. Actually, they are facing a kind of deflation at the moment, and they try to get it out from the situation. As for the central bank policy or monetary policy, I think that the rate hike has peaked. As mentioned earlier, Europe started their rate cut, Bank of Canada as well, and we think that US will follow suit soon, maybe in September and followed by December, 2 rate cut this year. As for China, I think they will maintain a accommodative stance because they are in deflation. The price movement or inflation are in negative territory. So they are not in the rush to do anything, but to maintain the loose monetary policy. As for the dollar, or Malaysian ringgit, generally the country that has been increased interest rate faster than the other one, those would appreciate against the slower that to increase the interest rate. So at the moment, US interest rate Fed fund rate is above 5% versus Malaysia 3%. So there's a discrepancy. That's why dollar remains strong relative to Asian currency. But we think the rate hike has peaked, and it's a matter of time before to see the declining interest rate. So then the dollar maybe has peaked and move sideways at the moment, if not down. So how do we asset allocate between the income of fixed income versus equity? As at April this year, we upgraded the equity from neutral to slight preference on equity over fixed income, because we reckon the second half on 2024 we should start to see earnings growth or earnings recovery. One thing you need to remember that equity is all about growth, okay? Whereas fixed income is all about income. So for equity to continue to rally, we need to see growth. So we think recovery in second half will happen. So our strategy continue to emphasize quality growth and income attributes, because income relatively are on the high side. We think that it's attractive to stay invested in fixed income product or money market. And at the same time, I think there's opportunity for equity, those especially with the quality growth. Next. Next, I'll just briefly go through a global outlook. So this one just to show a table on the left is the GDP number. So as again, third quarter last year was a surprise. But again, year to date is still stronger than expected. But we think will continue to moderate going to the end of 2024 because of high inflation rate and also the declining household saving, and also the spending by the government also has been declining. As can be seen from the chart on the right, the retail sales also has been on a downward trend. Yeah. Next. As mentioned earlier, so the slowdown in the economy is because of the declining excess savings. So as you know, in US, the only country that the government actually give free money to everyone, including the rich one. So you can see the spike in the savings, the shaded chart has been declining. So they have been used up all their savings. So that's why I say the domestic spending will slow down going to 2024 and 2025. On the right side, you can see the household debt to service ratio has inched up to pre-COVID level, but it's not alarming yet compared to the past before 2010. So I think that it's not worrying yet, but we are monitoring closely. Next. Inflation has been trending down, but of course has gone sideways. But we reckon that going into the end of 2024, as mentioned, the weakening domestic demand should see inflation to trend towards the Fed target of 2% to 2.5%. Next. So these are the interest rate by US. You can see the pace of rate hike in the past 2 years is one of the steepest. Okay. Of course, if you take the 1970s, it will be higher. But again, against the 20 years, it's still on the steepest. On the right side, just to show what's the interest rate direction that painted by the central banker in US. So you can see the trend is going downwards, but it's still elevated at 4%. Next. As for moving to Asia, so leading indicator are pointing to a stable recovery. So of course, the biggest GDP will be China, something that we need to watch closely, especially for Malaysia and ASEAN nation, because they are our largest trading partner. Of course, the India continue to soldier on, continue to grow above the trend. So these two largest economies is something that we need to watch quite closely. And India is one of the preferred market at the moment in Asia. Next. Whereas inflation in Asia are more, under control, unlike US or Europe. Europe because of the Russian-Ukraine tension, whereas for US it's largely due to the free money given by the government in the past COVID time. So a lot of money to spend. So rising inflation and selling prices there. Whereas for Asia we do not enjoy the free money as much as those in developed market. That's why the inflation in this part of the world is a bit more manageable at the moment. Next. These are the performance or return in the region. As you can see that the market return are under different category. Multiple expansion means it's a re-rating to the market, whereas some rally is driven by EPF growth, which is largely Taiwan, India, Japan, Philippines, and Korea, whereas places like Korea, Indonesia, and Thailand face some derating because of the domestic issue they are facing at the moment. Next. So to look at Asia, we need to look beyond China's lens. So in prior to COVID time, everyone just flocked into China because of the largest economy and the earnings continue to grow. And the government is more supportive. Whereas post-COVID, things has changed. And we need to relook how we look at Asia. So which are the market that we are cited on? India is one of them, and Indonesia as well. We think that despite Modi winning less majority, we think the structural reform that has been carried out for the past 10 years is here to stay. And look at the table on the right side, the debt is one of the lowest in the region. And India on the left side are showing continued trend of population growth. So population growth is a function of the GDP growth as well. Next. Improvement in China, the export data is mainly driven by Europe and also US. Of course, the domestic activity has supported the equity rally, but again, the domestic confidence are still quite soft at the moment, has not recovered yet. But of course, things are improving in China. Next. These are the policy being announced so far. We compare to period 2008, 2014, and 2020. I mean, it's a bit noisy on the table, but of course, looking at the far right, 2020 to present, I mean, the bullet points is a lot more compared to the previous period. Means the government is serious and paying a lot of attention to the soft economy. So, but again, it's still too little support to bring China out of what they are in at the moment. But the things are improving. We think that has bottom, but we need to see something new or a shock to the system to bring China out of the bottom. Next. As mentioned, government support has been accompanied by positive market reaction. So as mentioned, post Chinese New Year table on the right, the market has rallied and we don't see new low as in the equity low. So we continue to see higher low, higher high, which is positive. But of course, to break out of the trading band, we need to see more convincing measure by the government. Next. Key thing to watch out for in the past, as you know, the China market is typical of Asian market. Property sector is one of the largest GDP component. So for China in the past, it's about 30% of GDP are driven by property. But of course, since then has declined after the government tried to clamp down on this speculative buying and to move towards manufacturing, especially in the renewable, EV, solar panel, wind power, and EV battery as well. But looking at the component of the GDP is less than 4%. So to replace such a large component of the GDP, it will take a long time. So they need to stabilize the property eventually and continue to push on the manufacturing side. Yeah. Next. Okay, moving closer to our Malaysia, ASEAN. So ASEAN generally are a few catalysts. First of all, is tourism. As you know, they rely a lot on tourism, especially our neighbor in Thailand and Singapore as well. And Malaysia is catching up because the money is sticky and the multiplier effect is much faster than the rest and predictable. Next. The other one, trade diversion. This is happening for the past 20, 30 years. Okay, it's just accelerated after the earthquake in Japan, the flood in Thailand, and lately due to the US-China tension. And this COVID supply disruption further accelerated this FDI flow. And lastly, will be the tension between China and Taiwan. So in the past, you hear about China +1, and lately is Taiwan +1, because no many company or even the company based in Taiwan need to move out of Thailand just in case the China try to retaliate and attack Taiwan. So they are moving a lot of their capacity or new capacity out of Taiwan. So that's why Malaysia is one of the beneficiary, and we start to see a lot of Taiwan investor coming on stream. And to Taiwanese, Malaysia is not a foreign company, so they have been in Malaysia more than 10, 15 years. So it's natural attrition for them. Yeah. Next. So now talking about Malaysia, so something that we should focus a lot more because this is a event by Bursa Malaysia. So we'd like to showcase our capability in Malaysia. So this is our dashboard, how we see Malaysia. So we think the GDP number that forecast by consensus 4.3%, that's an upside risk for 2024. And the inflation number also will be upside risk because of the subsidy rationalization. So the next one will be the petrol. I'm not sure when is it. Hopefully it will be this year, because in the longer term it will be positive. And as for ringgit, we think that dollar has peaked. Ringgit potentially can increase from here, largely due to softer US dollar lah. Okay, and below is just our in-house commodity forecast lah. Okay, we think that will stabilize around this level. And also touch on the table on the right, the chart on the right, GDP number for first quarter surprise or upside. We won't be surprised that the second quarter would surprise to the upside again. Okay, so that will be positive for Malaysia equity. Next. So this is inflation number, upside risk. OPR, we reckon that OPR as in our country interest rate, overnight policy rate, will stay at this level. We don't think the Bank Negara will increase or cut rate in the near term, because their focus is more on the economic growth and not so much about inflation. Next. Malaysia are well positioned from the FDI. As you know that lately we have seen a lot of investment or FDI from the multinational company. So we will show who are those people. And we think this will continue for at least the next 6 months to 12 months, if not 3 years. Okay. Next. So what a few things that we turned positive on Malaysia. So we turned positive on Malaysia since July 2023. Ever since they announced a new policy like the National Energy Transition Roadmap, then followed by the NIMP, the New Industrial Master Plan, and then followed by further clarity on the NETR, and lately will be the National Semicon strategy, whereby they will invest about 25 billion into the industry to grow the industry. I mean, narrative has been consistent, but of course, we prefer it to be a lot faster. But again, politics is politics. Sometimes it will be delayed compared to what we expect. Okay, so these are a few things they try to do under NIMP. They try to lift the GDP and increase the salary of the Malaysian working in Malaysia. To increase the salary in Malaysia, you need to increase the value of the product that you produce. So what they do at the moment is the right thing. So they are pursuing the cutting edge technology and moving on to value chain. So you can see table on the right side in the middle. Those are our star in Malaysia, Opstar, our IC design company. Skychip, another IC design company, will be come on board or IPO sometime 2025. Inari, I'm sure that some of you are very familiar with our largest tech company, OSAT company, and Vitrox and Pentamaster. Okay, so what we try to do, or the government trying to do, is to attract people on the left side, the TSMC and Samsung, these two largest foundry maker in the world. Okay, so TSMC subsidiary just announced about 11 billion, if I'm not wrong, US dollars investment into Singapore, and being a natural neighbor to them, we hope to see some spillover from there. Okay, and what the government is doing is positive. Okay, so with that, I think hopefully we can start to see a very high quality company being listed in Malaysia lah. Next. So these are the things that are shared by the MITI, our Minister of Trade, International Trade. So what they're trying to showcase is Malaysia is the 6th largest semicon exporter. 6th largest, yeah, even though our country is not even the 10th largest. Okay, so you can see how big we are in terms of semicon industry. Okay, and what we have talent. And of course, most of the talent has moved to Singapore to work in their high-tech plant. So what are the incentives given? So a lot of incentives, the panel status, tax allowance. Again, some of the ministers saying that they don't even need to offer this incentive because the investment is coming to Malaysia because what we have is the energy, water, cheap land, and talent pool. Okay. Infrastructure, you are not too in. I'm sure some of you are quite familiar. Kuling Habitat, Bayan Lepas, Batu Kawan, next to Penang. Okay. Next. So these are the few plans that shared by the National Semicon strategy. So they try to have 500 billion investment in phase 1, followed by phase 2, where else they will see to create 10 Malaysian company in design and advanced packaging. So people like Upstar and Skychip should benefit eventually. And train and upskill 60,000 high-skilled Malaysian engineer. This is very key. Without them executing this, I mean, you won't see big company will come to Malaysia because we don't lack of labor or talent pool. So how the government trying to do is to provide 25 billion to start. I mean, it's not different from the like of Korea, Japan, and China. So the government has putting a lot of incentive to attract all this investment to their country. Next. So as mentioned, these are the few big profile company that recently invest in Malaysia. Microsoft, 11 billion into data center and the cloud infrastructure. Nvidia tied up with YTL, $4 billion. I mean, just the start. Intel intend to invest 30 billion in Malaysia. Okay, Foxconn as well. So these are the big name. Hopefully this will continue. And I think with the rising investment in the data center will continue to attract names to come to Malaysia, which I will touch on next slide. Next. So these are the the big headlines in the past 2 to 3 months. A rising star in the data center region. So why Malaysia? So here to showcase the difference between Malaysia compared to the rest of the region, in Asia. Okay, in terms of capacity, at the moment we have 260 megawatt capacity. The intention is to grow to 2003 by 2027, almost 10 times in the 3 to 4 years time. Okay, so let's see how big is the potential, and what do we have here to offer to this data center guys? We have energy. So our reserve energy is about 40%. The required reserve from a country is about 20%. So we got 20% extra to supply to this data center user. Secondly, we got access water as well, which is touched on by the Age Weekly over the weekend. And thirdly, is a stable government, which is something the region are lacking, the likes of Thailand. Indonesia are waiting for a new government to come on board. Okay. Whereas country like Indonesia, Singapore, they are lack of energy. The energy reserve is either below 20% or just at par 20%. Okay, that's why, I mean, not many country can attract. Even Vietnam have to turn down some of the FDI because they've been growing so fast, but the capacity on the energy side has been lacking, and they are trying to push as fast as possible. But again, because of a strong dollar, and they need to import a lot of the raw material to the country, and this one will cause some depreciation to the Vietnamese dong, so they need to balance it out. Okay, so but Malaysia are ready to accept all these investment because of the what I mentioned earlier, the rush reserve in water and energy as well. Next. So in terms of valuation, Malaysia is one of the cheapest. Okay, if not one of the cheaper one. Okay, and we have not went past the mean valuation for the longest time, which I will touch on later. Next. So what are how do we invest in the region? So we have, again, asset allocation, we have slight preference, equity or fixed income. At the moment also in Asia, we are looking for opportunity. So we liked semicon industry. We turned positive in October last year. We remain so. I think with the proliferation of AI capability and the usage will continue to drive the demand for semicon. The AI beneficiary, so those people that supply the chips, rising capex, and India selective investment turnaround company in China. So are also on our radar. Whereas for Malaysia, we reckon that we are in the structural growth since middle of last year. I think this one can last for a while. And why Malaysia stand out? First of all, Malaysia has is stable in terms of the politics. As you all know that Thailand is quite messy at the moment. I mean, there's a fight between the current prime minister against Thaksin. And then Philippines, there's a split between the deputy president and President Marcos. Deputy just resigned from the cabinet member last week. Vietnam still undergoing some transition of power. Indonesia waiting for the new president to come on board, so we won't know what will happen and who is the cabinet member. Okay, Singapore, our neighbor, Lawrence Wong, new prime minister, and speaking to the local, he's pro growth, and to grow faster than in the past. I mean, Lawrence Wong definitely need his neighbor, which is Johor, to work together to attract more FDI to this part of the world. So that's why Malaysia stand up from there. And Malaysia, I think the government is here to stay until the next election. Okay. And of course, in the past, during the COVID year, we have this withdrawal from EPF, Restari, Citra, all that to the tune of 150 billion. And this time around, we will not see that, even though there will be a EPF account tree, but the amount will be much smaller. And the money taken out from a country will be spent in the economy. So without these two, I mean, the political stability and no more withdrawal from EPF, i.e. the domestic liquidities should be quite abundant. So we think that Malaysia is poised to attract a lot of capital flow, which is so far correct. Year to date, Malaysia is one of the best performing market. And we think that there's a lot of room to rally further from here. And of course, all hinges on the few things. US interest rate need to be cut to attract certain fund flow back to Malaysia or emerging market. Secondly, domestic liquidity continue. Thirdly, government execution or policy execution in Malaysia. So all these three need to be aligned to attract further flow or further rally in Malaysia. So how are we positioned? So we max out our equity exposure in our balance fund since July. Before July we were underweight equity. Post July we neutral. Come to October 2023, we went maximum equity weight, and we remain highly invested in 2024, at least for the next 6 months. Okay, so how are we positioned? So we continue to rotate from leader to laggards, and we invested in teams such as National Energy Transition Roadmap that will benefit from that, whether the solar power, the IPP producer, contractor that will benefit from there. And of course, we all wait on utility. Utility as in because all these data center required a lot of energy, and utility, I mean, only a few players in Malaysia will benefit from the once this data center is in place. So it take about 1 year to build, 6 months to test. So in total about 1.5 years. So by middle of next year, first one of the first new data center will start to operate, and then utility company will benefit from that. And again, beside energy, they also require a lot of water, and water we have enough reserve, but because the pipe that existing in Malaysia we have right now is just too small, we need a bigger pipe to cool down the data center. So we also see a lot of some of the utility player in water will benefit from there. And all this require a lot of new capex, new transmission grid, new energy storage, and new piping. Who will benefit? Contractor, especially those that are exposed in this sector. Why we like property? Because of the data center require a lot of land, and eventually surrounding property around the data center will benefit as well. And of course, as mentioned earlier, this data center will attract a lot of supplementary factory to come on board as well to supply the parts of like diesel generator, the racks, the cooling liquid cooling system to set up their plant near the data center in Malaysia. Okay, so again, this require land and this require people as well. And this we are entering a higher value added chain as well. These people hire technical worker, higher skill worker, and require higher pay. And higher pay means you got higher spending power. So hopefully, eventually, we can get closer to Singapore. I don't know how long it will take, but eventually we get there. If you go to Johor, you can feel that people in Johor spend a lot more compared to even KL at the moment because of the closeness to Singapore. And also the selective oil and gas sector, we think that Petronas will start to spend on the upstream and downstream. So company that are supposed to Petronas will benefit from there. Okay, eventually then the banks will pick up because all this spending or this building of data center will require certain fund source of funding. So banks will benefit from there. Okay, so and then how about the strategy on sector wise? We are broadening the sector exposure from technology. So we think the assignment in AI is rational, given the tremendous potential to transform the industry. But investor holding too much tech exposure also need to diversify. So one way to reduce its concentration risk is to position into overlooked Asia, ASEAN, and domestic market. And at the same time, we need to balance the risk as well. So we diversified with the yield strategies, yield generating strategy as well into selective bond fund. Next. This is to show what's the difference between 100% invested in equity and 100% where was a 60-40 balance fund. So the balance fund will be the lighter line. Okay, so eventually, longer term, I mean, both balance strategy or 100% fully invested in equity will converge. Just that the volatility is much less in balanced income fund compared to 100% equity fund. Next. Next. So what are the conclusions? So we think the volatility will remain elevated because of the geopolitical tension and also the narrative between the recession, no recession, and of course, the latest one will be US presidential election in November 5th. Okay. Looks like Trump could be making a comeback, but let's see. So I think by the market, I think it's better ready now. It's not the first time. Okay. And easing headwinds suggesting will get better. So we think the second half will be much better. And focus will be quality growth and income attributes. I think I will end here. I would start the Q&A.
All right, so if any questions to ask our speaker today, please write your question in the Q&A box. We will address them accordingly, all right? All right, so the first question I see is, can you tell us about the energy consumption of data center? So why do they require so much energy to run the data center? And why is Kulai selected as a location for data center?
Kulai. Okay. So this is why you require a lot of energy because it's generating a lot of heat. And those data center that powered by generative AI, they consume even much more, like 3 to 4 times more compared to the conventional data center. So That's why you need a lot of energy to cool down the entire data center. Okay, so I don't have the exact number, but there's a calculation there. Okay, but again, at the moment, the data center, as you know, the energy consumption at the moment is around the world is about the whole entire energy consumption for Japan. So they can see that how much they are consuming at the moment. So that's why all these hyperscaler like Amazon, Meta, they require certain amount of renewable energy produced to supply to their data center eventually. Okay, but this one will take some time. And why in Johor and Putrajaya? Okay, two things they need to be quite clear is the reason why the data center concentrated in Putrajaya because most of the urban users are based in Klang Valley. So that's why it's natural for them to set up in Putrajaya or Cyberjaya. Okay, so people like Amazon, Google, their data center are residing in Putrajaya because most of the users in Malaysia are in Klang Valley. Okay, and the other hottest one will be Johor. Most of the data center that they announced, we spoke to, they say that these are the spillover from Singapore. Because if you, I'm not sure how many of you remember that Singapore is one of the hub for Asia. But in the last 2 years, the government said that in our data center consuming too much power. At one point, the power tariff in Singapore actually increased like 4 times. Okay, that's why YTL Power benefit a lot from that because of the rising tariff. Okay, and why is that the rising tariff? Because it's a free market in Singapore. When there's a shortage of power, those who can pay most will get the power. And at the one point, Singapore is facing some shortage. And because of that, the government came out and say no more new data center until lately they announced a quarter of 300 megawatts. So what's happening right now? So most of these people is continue to grow and they got no choice. They can't grow in Singapore. They're moving to the closest where they can find the land, which is Johor. And it's better to have data center close to Singapore because the infrastructure spending is much lower. The closer, the better. So that's why these are concentrated on these two areas. And based on the expert, Johor will grow at least about 10 times in the next 3 to 4 years in terms of the capacity, whereas Putrajaya about 3-4 times.
So Johor have much more potential.
Yeah, cheaper land and more land.
Yeah. All right. So the next question is by Clarence Chan, where he remarked that the U.S. rate cut is predicted for 1 or 2 cuts this year compared to last year. However, the FBM KLCI is still unable to sustain the 1,700 points. So, what do you expect till year end? I believe he refers to FBM KLCI.
Okay, so just touch on the interest rate. It started the year with 7 rate cut expectation, and then went to almost 0 rate cut. But the market right now move back to 2 rate cuts at the moment. But again, don't focus too much on the inflation number and interest rate. One thing you just need to be clear of is the rate hike is over. Okay, how many rate cut? Nobody knows because nobody can predict the inflation data. Okay. As for FBM KLCI, we have not seen 1,007 for a long time. The highest was about 1,640-ish last week or a week before. Okay. So will it hit 1,007? Eventually, we think it will. This is our in-house view. Okay. As mentioned, a few things we need to see. Domestic liquidity remain robust. Earnings recovery need to come in. Government policy reform need to happen. Okay. And lastly, the rate cut in US. This one will attract the foreign fund flow into the emerging market. This one I think will happen probably towards the end of the year when the Fed begin to signal how many rate cut by then. Okay, so we are positive on this Malaysia. Okay, of course, being one of the best performing market in the world, they are close to double digit. I mean, it's normal to see some profit taking. If you track our mutual fund performance. Some of our peers, even including principal, the year-to-date return ranging from high single digit to about 42% in 6 months. I mean, this is something that I have not seen in my life, yeah, in this industry. Okay, so it's natural. If I hear to tell you, yeah, we'll continue one-way street, then you better don't listen to me, lah. Okay, it's just too much risk, and the market need to absorb and rethink how to approach the market, lah. It cannot be just one way. It's natural to have some correction. It's healthy. Yeah.
Right. Thanks, Chun Hong. So you mentioned about emerging markets, right? So the next question by Askar is that beyond Asia, are there any other emerging markets or asset class that you believe will offer attractive opportunities in the current landscape?
At the moment, the one that we like structurally will be India, Vietnam, and then Indonesia. We need to watch closely what this new president want to do. Okay, it's just too noisy at the moment. One day say this, one day say another thing, so we are not sure. Okay, and the other two will be the medium term, Taiwan and Korea, because of the semicon exposure lah. That is the direct play to generative AI lah, in this region lah. Okay, as for global, we continue to like US lah, because US have anything in the market, the best place to be in lah. Yeah.
Yep. So, but just now you were saying that the savings rate in US has dropped drastically compared to a couple of years before, where a lot more free monies were available. Are you not concerned about that?
No, because it just revert back to norm. It's not like declining, and also the unemployment rate is about 4%, so it's still very healthy. And again, you need to bear in mind, ever since the GFC or the 2008 crisis, the household debt has collapsed. In other words, they have been repaying their debt for the past 10 to 15 years. So their balance sheet is very healthy. And also with the higher real wage growth, I don't think it's a concern in the near term. Yeah.
Right. So, which sector is a principal overweight in the US market?
As mentioned, the equity, any place that offer growth. So we like tech and those that are supposed to provide these generative AI components lah. Yeah.
All right. So the next question is that you mentioned that you have a preference for equities over fixed income. Can you elaborate like which type of equity should retail investor focus on? Is it on growth type or value type?
Okay, so as mentioned, the equity will continue to perform if they continue to show growth and surprise on the upside. As for value sector, generally this sector will perform when market bottom lah, and then economy start to recover, because it's highly cyclical. So at the moment, we don't see that yet. Okay, so we still prefer those that provide growth lah. But of course, in different market, you have the different strategy. Like at the moment, China is undergoing deflation. So those that deflation as in the bond yield continue to trend downwards. So company that can pay higher dividend will benefit from there. So in the environment with soft economy growth, of course, we focus on growth, and at the same time, company that have good balance sheet that can pay dividend.
All right. Thanks, Chen Hong, for sharing your perspective. The next question is by Rabindran. Is the demographic change in Malaysia a cause of concern for you, given that the known issue of brain drain out of the country for the last few decades in terms of GDP growth?
Yes, it's a very good question. That is it could be a structural problem. We don't address this in the next 5 to 10 years, because it take about a generation. A generation means 2 years in kindergarten, 7 years, 6 years in primary school, 5 to 6 years in secondary school, another 3 to 5 years in university. So it's close to 20 years. So it takes time to produce talent. And you already pointed out the brain drain that's happening. So again, this special economic zone between Malaysia or Johor and Singapore is supposed to attract back some of the Malaysian that have moved to Singapore to come back to Malaysia. So assuming that, I mean, our minister, deputy minister of MITI, Liu Jintong, always like to say, if we can offer a salary two-thirds of what Singapore can offer in Malaysia ringgit term, we could attract back some of this talent back to Malaysia lah. And closer to home. I'm sure that not just Malaysian lah, any human being would like to be closer to their home, if they can choose that lah, or she can choose that. So hopefully that will attract some of the money. I mean, some of the talent pool back to Malaysia lah. Of course, I mean, some of the evidence are showing that. As mentioned, the data center that spill over from Singapore to Malaysia, some of the staff are being moved back to Malaysia, retaining the Singapore dollar salary. Yeah, not even two-thirds, the full Singapore dollar. So that's a lot.
All right, thanks, Chun Hong. The next question is, since India looks promising with their structural reform, besides exchange traded fund, what is the best way to invest in India? And what time frame are we looking at?
Okay, so India is a emerging market. Yeah, so I mean, you cannot fight the local by investing into small cap in India, because valuation in India is double or triple of Malaysia equity market. Yeah, so the way you invest in India, under the best case is either through ETF or through unit trust. If not, yeah, invest in the top quality equity names in India, the private owned entity. That's the cleanest. Yeah, but not necessarily the large one will be good. I mean, the past 6 months, you know that Adani, one of the richest family, being faced a lot of scrutiny. The share price has been whacked down 80%, went back out 100%. So you have to be careful in emerging market like India. Yeah.
So the fund is the way, is a suggested way to get exposure to India.
Yeah, because the fund manager will have to be actively going to India to understand what's happening. They don't just watch from outside of India. So like people from principal, we actually spend at least once a year to attend some of the conferences in India to find out what's the thing happening in those markets that we invest in.
All right. The next question is, while China's outlook seems to be improving, so there's mention of complex macro backdrop. Can you elaborate on the specific challenges and uncertainties that China faces and how this may impact regional growth prospects?
Okay, so the few things happening are the property slump and also the confidence that been dented during COVID. I mean, if you were in China, even in Hong Kong, during the COVID time when they locked down, a lot of them went crazy or can't take it anymore and decide to just leave China, especially the expatriate. So the Hong Kong, all these expatriate are slowly moving out of Hong Kong because of that. That's one thing. The confidence level is at the rock bottom. Property is don't see a sign of recovery, but if you track the secondary home sales, it's very healthy and it's rebounded quite strongly. That is good. So that's the primary side. Thirdly, this is a structural problem, which is the aging population, declining working age population. So as I mentioned, GDP is a function of labor and demography as well. So what they need to do, they need to be like Japan, invest more on automation, getting more female to work, and getting all these rural people to come to work as well. So at least these are to sustain the productivity in China. And the most difficult one to solve will be the tension with the developed market. This I don't see a route out for China. Okay, so but a good thing is the China are not like India. China is determined by just one person. India, you need to tackle a lot of the population on parties. So that's one good thing out of China. Yeah, and they got ammunition, just that the the local government is running out of money. So the federal or the central government need to give the guidance and provide the liquidity. It's not easy because it's a big country. Yeah.
Yep, certainly. The next question is by Jane Yo. What are the common misconceptions in the market related to investment in the data centers?
Misconsumption. Okay, so a lot of people try to compare this time the data center to the COVID time, the glove mania. So you can see a lot of the non-related company also announced the investment in the data center. Something that we need to differentiate, or those big contractors are telling us, is you focus on those data center that are being managed by the hyperscaler, the likes of Meta, Google, Amazon. Whereas be careful of those that announce they will build and then they will lease out and find customer. That is quite dangerous. Okay, and also, I mean, this one will compete with the likes of the data center operated by China. As you all know, some of the China data center operator, they operate on container basis, so they can move their container around the world wherever they find a demand. So if you go into that segment to compete with China, you prepare to lose a lot of money lah, huh? Because you know China, when they compete, they can go all the way down in terms of the margin.
All right, thanks, Chun Hong. So what is your take on the Hong Kong market?
Hong Kong market, I think has bottom, but they need to find a new narrative in terms of growth. But I think lately China also tried to be very supportive. They recognize that they cannot treat Hong Kong like the second China, because you are chasing away some of the FDI or the multinational company or the financial hub, because you can see a lot of them are moving to Singapore. So lately they kind of say, okay, we need we need to revert back to the old Hong Kong, but yet to be seen. So if you speak to some people who work from Hong Kong, it is quite depressing at the moment.
All right, thanks, Chun Hong, for sharing your perspective. The next question is by Alex. How much upside do you think US has? Will there be bubble burst given that the stocks are at all-time high now?
Well, I mean, if you're all-time high, it doesn't mean it's a bubble. Something you need to be aware of. A bubble means valuation that you think that it doesn't make sense anymore. Then that is a bubble waiting to burst. Okay, so we don't think we entered the bubble yet. Valuation. Okay, just take the superstar right now, the Nvidia, Jensen Huang company. I mean, valuation, yes, 30 plus. It's expensive. To historical trend, yes. But if you project the growth, they've been growing last 2 years more than 100%, and the coming year or two, maybe 30%. I mean, if you factor the growth into their valuation, it is not expensive. Then take example of the glove bubble then, when people saying that Top Glove can go 100 ringgit or 130, I can't remember the exact amount. But if you look at the valuation, price to book at the peak of Top Glove is about 10 times of their NTA or 10 times of their book value. Yeah. In other words, if I'm a shareholder or the owner of the company, I will just sell and I can build 10 of Top Glove. Okay. That in a way a signal a bubble when you look at the valuation. Okay. It doesn't make sense. Why would the glove company trading at 10 times price to book that they're generating such a low ROE? Okay. So we need to go back to fundamental and back to valuation. When will burst? Well, it's too early to tell. Maybe the valuation go much higher, double from here, or suddenly people realize, okay, AI are just too early, which I think is applicable in the world, but how early is still too early to tell, because people are still assessing the potential of AI, and also the regulation. Just like for us, principal also, we are still waiting for our regulatory in the US to whether allow us to use AI in our system.
All right. Thanks, Chun Hong. Due to time constraint, I think we'll just take one last question. We see increased tensions between Philippines and China lately. How much impact will there be to Malaysia from the ongoing US-China Cold War if Trump is elected in November?
Okay, so ASEAN, including Malaysia, try to position themselves as a neutral country. And lately, when Anwar announced this 25 billion capex for semicon, he said he tried to position Malaysia to be the most neutral in the world. I mean, which is the right thing. So that's why we benefit from this FDI flow for the last 20 years and rising and accelerating because of the standing we have at the moment. Only lately it's much faster because of the much stable country versus the rest of the region. So yes, Malaysia the policymaker need to be very mindful of the words they use. Of course, I mean, either US or China, these two are the two largest, and we shouldn't take side. And you know what's happening in Philippines. So Malaysia, Philippines, and the rest of ASEAN need to work together to defend themselves from all this pressure from China and US, which we can, because as a nation, as a grouping, we are number 5 or number 6 in the world. So it's big enough to have a say. Okay, and we are the largest producer of palm oil, rubber as well. So we have the potential to negotiate if we come as a group. But again, whether Trump come on board or not, we are ready because it will be our second time facing him. And we are more ready, just like how we faced the COVID for a second time. First time, all panic, deja vu. Everyone thought they're going to die already, but after experience the first COVID, oh, it's not that bad. Maybe the first strain virus is stronger, but subsequently we know how to handle the situation. It's the same thing when Trump come on board. I think we are much more ready to handle it better this time around. And maybe it's an opportunity for us to grab even more investment from around the world. Yeah.
All right. Thank you so much, Chun Hong, for doing this engaging session and Q&A for us. So that's all the time we have for question and answer. So ladies and gentlemen, you just heard from Mr. Lee Chun Hong, who is the Chief Investment Officer of Principal Asset Management Berhad. Thank you so much, Chun Hong.
Thanks, Shane. Thanks, everyone, for joining us. Hopefully, Malaysia is here to stay. Thank you. Bye.
All right. Okay, for those of you who haven't checked out Bursa Fund platform, you can actually visit this link, which I've just given you in the chat box. They're available on Bursa Marketplace. So you can scan the QR code or click the link that I've just given you in the chat box to visit Bursa Fund platform. Is a place that aggregate multiple unit trusts that you can explore from this platform. All right, you can visit Bursa Fund platform to check out what are the mutual funds that you can consider on Bursa Fund platform. All right. So for our next webinar, it is titled Discover Your Trading Styles. So it's happening on tomorrow, 10 July 2024, 8:30 to 10 p.m. So I also given you the registration link in the chat box, whereby you can register for this session if you want to discover, are you better suited, to do swing trading, day trading, scalping, or even position trading, right? Just join this session to discover your trading styles. So with that, I want to thank all of you here for staying tuned until the end of this webinar. Hope that you have gained enormous value listening to this, to the sharing by the Chief Investment Officer from Principal Asset Management to learn about the outlook for the US, China, ASEAN, as well as in Malaysia. And last but not least, don't forget to check out Bursa Fund platform. All right, so bye-bye everybody. Hope to see you in the next session.